Hey, what's going on, everybody? Welcome to another rapid review. Appreciate everybody joining live, whether you're on YouTube or you are on X. Um, as always, comment section or I guess you'd say the chat is open. If you guys have questions, comments, or if you want a stock to be looked at later on when we go through stocks, just drop it in the chat. If you want to just say what's up, just drop it in the chat. Look, rough end to the week, a lot to go through. So without further ado, it's time for the rapid review. All right, let's get started. As always, there's a disclaimer: educational, informational purposes only. You know that. You guys know the deal. Hey, what's going on, Chad? What is going on, Ron? Good morning. Good morning. All right, so let's get started. Market direction. Look, we're still in an uptrend. We're also still in a power trend. So just take note of that when you're looking at the overall context of what's going on. One down day does not mean that we are completely doomed. Again, not positive, but still understand we're still in an uptrend. Understand the power trend indicator is still intact. That could quickly change, but just where we're at as of right now. Looking at distribution days, we have 3 distribution days on the S&P, 5 distribution days on the NASDAQ. So looking at the tracker, and for those who don't know, that's kind of just the labeling down here. We got 3 distribution days, like we said, on the S&P. We lost the 9/5 distribution day, and that was due to a time expiration. We talked about that happening last week. It happened on Friday, but we also gained a distribution day on Friday. No surprise there. We're down on volume. You can see that on the 10/10 day. So that balanced us out. So we lost one, gained one, resulting in a total of 3. On the NASDAQ side, we did not, NASDAQ, what did we have? NASDAQ, we lost the 9/10 distribution day, and that was due actually to price action. So that fell off, but we also gained the 10/10 Friday distribution day down here. No surprise there. So again, balancing out. Basically, we stayed the exact same from last week. Both indexes lost one, gained one. Going into next week, we will see this 9/10 distribution day drop off. So keep in mind of that. And other than that, that is really it on distribution days. We'll look at what happened for the week. This is all Friday's action. We'll look at it when we look at the charts. But you have the S&P down 2.43%, NASDAQ down 2.53%, Dow down 2.73%. So everything getting hit. Friday was a rough day. Resulting in the big down week. Still leads the S&P, leaves the S&P up 11.41%, NASDAQ up 14.9%, 98%, and the Dow up 6.9% for the year. Looking at how we are doing, NASDAQ again, as usual, leading it out. Moving averages, big change in the moving averages. We've been green on many of these moving averages for a while. On the S&P and the NASDAQ, we had a severe break on Friday, resulting in a significant drop below the 21-day EMA. This is the main area that I really, for my style of trading, keep an eye on, is that 21-day EMA. So a break of that, super negative signal. The question is, and we'll talk about this when we get over to the charts, is now how do we react after that break? Are we spending time below it, or are we recovering quickly? The Dow, pretty much the same, except actually broke below that 10-day simple moving average. So another negative indicator on the Dow. And then the Russell, pretty much the same as the S&P and the NASDAQ. All right, so let's jump over and let's take a look at what is going on with the indexes. We'll start off as we always do on the NASDAQ on the daily. Sticks out like a sore thumb, doesn't it, right? We have this huge, massive down day on Friday. Really, really rough day. But prior to that, we were basically just riding that 10-day simple moving average. So you have this Thursday, Wednesday, Tuesday, Monday. So Monday, we kind of got up, made all-time highs. We reversed, pulled to the 10, came back up again, paused, and kind of stalled with really, really tight action right at those all-time highs. Going into Friday, I don't think a single one of us was really concerned, except for the fact that we knew, this market's been going on for a while. And there's always that chance for a pullback, but I don't think anybody expected the pullback to be what it was. This is reminiscent of that DeepSeek AI day that we had earlier, where we were just like a massive, massive sell-off. Look, it was basically in a reaction to some posts that Trump had put out in regards to tariffs and some relationship stuff going on with China. Don't really care from a trading perspective as to really what caused it, but that is just what caused it. And we had that severe break on high volume, resulting in that distribution day. From here, right? From here, the question is, oh, and one other thing to add. Ironically, and this is where people say technicals don't work. Like this is like this stuff, sorry. This stuff happens very, very often, right? We have this prior low that was really, really important to keep an eye on, this 925 low. And you could just see, like, even intraday, we pulled right into that level. Let's see, the low of the day was 22, 193.07. We were at 22, 185.87. So like right above, the buyers kind of stepped in and held it from going any lower than that. And then we closed basically at that low. So clear level that we were expecting, could possibly see some resistance. We did see that resistance, which I think is healthy. If we had broke through another key level, that would have been even more concerning, would have been deeper down. But regardless, you could see that how important this low is now, where we found some support at that level for now. Let's look at, sorry if you hear my dog barking. All right, let's look at the weekly and give it a little zoom in on that. Look, pretty obvious, right? We had this big upper wick, and then we just kind of rolled all the way over again to that low of the week of 922. So you can see just up and then right back down. But really, let's talk about key levels. Let's talk about how we're going to look at this going into next week. Got this a lot from Mike Webster, right? It's the expectation. Like, based on what we're seeing here, what is normal action, what is abnormal action, and what do those things actually mean to us as traders? So normal action, I would say, on the downside would be continuing to find some tightness and some support around here, maybe chopping around a little bit. I think that's completely normal action if this uptrend is going to resume. There is a possibility we get a little bit of a gap down or a shakeout, breaking through here, maybe coming into the 50. People are super concerned. We kind of roll back over and maybe find support at the 50. So the key levels that I'm really looking at on the downside are this low. Can we continue to find support there? That would be super, super positive. If we don't, then really it's that 50-day simple moving average. Can we find support there? If we break below this low or we break below the 50, that each one of those increases my bearish outlook as to what's going on right now in at least the short term. I don't look too far out. Things can change, as you guys have seen on Friday, very, very rapidly. So this is just looking at what we see right here. On the upside, if we do find support here and we can get one of these, as we've seen this market continue to do, a little different that this is based off a real true news reaction, but as we've seen this market continue to do, sometimes we get that support and sometimes we have those quick V-shaped recoveries. If we do have that, then the question becomes what happens at that 21 EMA? Is it become an area of resistance or does it not? If it becomes an area of resistance, that's also a negative signal that we're having trouble getting back above that average. If we can get above it, same way we kind of did this with the 10, right? We got right back above it and then we found support. That's going to be a positive signal. So right now we're kind of at one of those crossroads of the market. We've established a lot of areas to keep an eye on, and based on how we interact with those areas, that's going to give us an idea of where this market could be going. One of the things that a lot of people are looking at, and I've looked at myself as well, is going right back into here, right? This is pretty sure, was this the DeepSeek day? Well, whatever. We have this big, big down day over here, right? And very, very similar. Breaking below 20, not as deep. We tried to get back above, didn't, got rejected, saw resistance, which is negative signal. And then we've kind of had like, this was just like a chop fest. If you were buying on these pullbacks and then kind of trimming quickly and swing trading through there, it ended up actually working out fairly well. Actually, I think this was the DeepSeek day right here, possibly. yeah, then you were able to make a little bit of money here, but this becomes very, very difficult to get chopped around, especially if you're trying to buy certain breakouts. You just get stopped out, buying again, get stopped out, buying again. If we see this is like worst nightmare. Getting just chop, 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 chop. Not fun, not good for trend following traders. So be aware of the possibility of a very choppy environment coming in. And if we do have that happen, do not let yourself just get that death by 1,000 cuts type of performance. This is really, I think right now, if you have positions doing well, just, let them do their things, maybe adjust where you might be considering those stops. But if you don't have any positions right now, it's very important, I think, to be very patient, because you don't want to end up in that chop fest. You don't want to be too hesitant. And this is where that kind of trading smaller sometimes is really, really beneficial in environments like this, where we know we could be primed up for a chop fest. All right, well, let's look at the S&P quickly. A little bit different. I normally say like the S&P is almost identical. I think the difference here is that we did take out that prior low, which is definitely not a good sign. We held well above the 50-day simple moving average, which was a positive sign. So same thing kind of here. Like, how do we interact around that 50? Do we pull more into it? Do we find this as a good level of support? Do we find that 21 as a level of resistance, or are we able to make it back above and hold above it? Same things we're kind of looking at, just a little bit different because of how we broke that prior low and we came into the 50. And the weekly, really not much more to say except that we're right at that 10-week moving average. All right. I don't see anybody with any questions or anything. Yeah, basically, look, we know what we're looking at. Having that idea of how we should react based on what the market does at different levels is really why I do this every week. I want to have a plan based on which directions we tend to go. We just talked about it. We know what we do on the upside and where we're going to probably get more towards the bullish area. We know where we're going to react more bearish on the downside. And then in that choppy action where we maybe got to be a little bit more patient, we know what that might look like. Doesn't necessarily mean that that's going to happen. Doesn't necessarily mean that this is like it's 1, 2, or 3. What's the result going to be? It's the market. The market does what it's going to do. But just having a general idea of where we're looking at, what key levels, will help you to navigate going into next week. All right, let's jump over now to Deepvue and let's take a look at the theme tracker. If you don't know, I am a Deepvue partner. This is the tool that I use for all my stock screening, all of my analysis, fundamental, technical, pretty much everything. This is their theme tracker. Love it. They've recently added where you have the ability to click and see the stocks that fall into these categories, which is super, super helpful. If you are interested in checking this out, right now there is a wait list, but it's free to get on there. There's a link in the description of YouTube, and there's a link in my bio of X. So you can click on that, throw your email in. That'll sign you up for the wait list. When they do start allowing new people in, you will get access. And there's also a discount code. It's a one-time code, so I suggest using it for the annual. If you want to sign up monthly first, try it out, and then decide if you want to use it towards the annual, just to get the best discount. All right. With that over, let's look at what went on with the theme tracker. The real big 3 that actually did okay this week compared to everything else is your Bitcoin miners. That is just, you can see for this week, like Hive. I know a ton of people just making a ton off of Hive. Wolf has been talked about. Hut. I hate talking about Hut because I blew that trade. Had a position. It was kind of lagging a little bit, and I rotated money somewhere else. Oh well, part of the game. But a lot of these names, I'm sure a lot of people are looking at in terms of the Bitcoin miners, and this team continues to be the strongest on all time frames within this week, except for Friday. Friday, it did get hit the worst out of everything. The other next group that I've been really seeing a lot of strength in, we saw it last week, we saw it this week, is just kind of healthcare stuff, pharmaceuticals, the genomics, and also the biotech. Those 2 groups did fairly well in terms of relative strength for this week, and they did also last week. And then you're seeing on that 1 month time frame, the genomics is up there and the biotech up there as well. So seeing that. Utes, he's not in here. My boy Stretch over from Discord, I don't see him. He didn't drop any comments, but if you know the movie, you know the movie. If you don't, I feel bad for you. But utilities, another one that's been doing very, very well. So just keep an eye on that. But yeah, what's great about here, like if we look at, here's some of the Bitcoin miner names, genomics, a lot bigger of a list, and the biotechs, a lot bigger of a list. I'll be honest, biotechs make me nervous, man. Biotechs make me nervous just because I've always had some poor performance with those because they are, very much based on a lot of the stuff with what stage drugs are they in and when things get approved and stuff like that. But regardless, still something I keep an eye on. All right, so we kind of talked about it, but let's just kind of wrap up on the overall market and exposure levels. The big thing here, like I said, I think this is a time to reduce exposure. We really don't know where this market is going to go. I don't want to say, oh my God, the sky is falling, let's get out of here. A lot of this, I think, is you follow your stocks and you'll see what happens. A lot of the stocks that I had didn't actually have any stops hit, especially the ones I had pretty good cushions on. A lot of them didn't even break the 21 EMA. So doesn't necessarily mean that we are doomed, but that could just be the first down day and we could keep rolling over. So have a plan for both directions, locking in some profits, reducing some exposure, and then getting to sit back a little more level-headed and just see how the market tends to react based on what goes on over the next coming week. Really big during this time frame, if we do continue to show weakness, is relative strength. Look and see what is bucking the trend of the overall market. Look and see when these big institutions are offloading shares in all these companies, where are they holding positions? Where are they like, okay, this is a long-term move for us. We do not want to offload. I'm going to assume a lot of this is going to be, we do not want to offload these AI names. We don't want to offload this. And you're going to see those stocks, because there is not enough supply going into the market by these big institutions. You're going to see those stocks hold up and outperform. They may still be going down, but you're just going to see that relative strength to kind of continue to rise as everything else is getting hit, and they are not. So if we do continue downside, relative strength is huge. And I also would say I like to look, if you're looking at some sort of metric like Deepvue has RS and AS, I like to look at a time frame that is coinciding with the downturn. I don't want a 12-month time frame. You're going to see too much data that doesn't correspond to what is happening now. So a 1-month time frame would be really, really good, I think. Even if it's a week time frame, those are pretty good to just see what's really truly bucking the trend and have an actual metric to it. So if you have positions, if things haven't got hit, consider maybe moving stops up, consider tightening things up. Just have a plan. Friday was a perfect example of what I say every single week. You want to have a plan for all directions. You want to have a plan if the stocks continue to go up, if things break out. You want to have a plan if things roll over and just get annihilated like they did on Friday. And then you want to have a plan if things kind of chop around and go sideways. Look, I said it Friday. Even in the beginning of Friday, most of us felt pretty good. I felt great. I had a small, got hit pretty much in the beginning of October with a couple of my positions, a couple of breakouts that didn't work for me. And I basically was recouping, almost getting to my peaks of where I was for my equity curve, and then completely rolled over and got hit pretty bad. But part of the game. You got to remove those emotions. You have to have a plan. This is just how the market is. It does not care how you're doing. It does not care what's going on in your life. It is just simply saying, here's what the market is doing. Here's what people as a whole are in terms of supply and demand. And you have to have a plan no matter what happens. So, all right. Let's jump back over to Deepvue. Not a lot of stock requests. I don't see any here right now. We did have one though over on there we go. Nope, wrong ticker. There we go. Discord. So shout out to Discord. If you are interested in Discord, there's a link in the YouTube, and on X, just shoot me a message. The question was, what do we think about Futu? Well, I didn't actually look at this before I brought it up. Look, it's to me, this one's clear. We just broke the 50-day. We just made lower lows twice lower low here, lower low here, even really 3 lower lows on this, down, closing the low day, huge volume, significant break. Where are we at? Just, almost we'll just eyeball it, just say a roughly 10% break of that 50-day simple moving average. When that happens, to me, this stock is going to need some time. Even if we are to get a quick random 12% up day and get right back above into that 50, this needs some time to digest what just happened. This is one that, sure, if you like the company longer term, I would keep on your watch list so that you don't lose track of it. But either way, I think most people are going to say this is a wait and see, because most often when you see stuff like this happen, the company is going to continue to roll over, or it's going to take some time to recover. Yes. All right. And there, just so you can see that weekly, like this thing's been getting hit. It's kind of been trending down. It's broke below that 10-week moving average. Definitely just sit back, be patient on something like this. All right. I don't see any other stocks in here. One of the things that was asked on Discord that I bring up today was stop loss orders. And Friday was a perfect example, especially for people who are not able to be constantly in tune with what's going on in the market throughout the day. Whether it's hour by hour, minute by minute, whatever it is, or even just being able to have your phone with alerts with you. The stop loss orders are huge. They are very, very useful tool to get you out at a price or pretty close to a price without really sitting and watching the market all the time. So it's pretty simple. You put a stop sell order in. You put a price level. You want to make sure that that price level is a hard stop that you have. I've heard of people saying, well, I like to trail the 21-day EMA. If the market is closing below the 21, then I will use I'll sell out of my position. That is not the type of situation that you're going to want to use this, because if you get an intraday break of the 21, like we had seen many times, like let's think of, let's bring up Hood. Do we have some intraday breaks? 21, maybe not Hood, but I think Life might have had one. Yeah, so like let's just take example like right here. And you can see some of my notes of how this is positioned. And I'm still in on this one because it didn't break the 21. And I've been riding this up for a while. But if you have that intraday break of the 21 and you have that order in, what's going to happen is that stop loss order is going to then become a market order, and it's just going to execute at the break of that price intraday. You do not want to use that for a stop like this. Those you have to, unfortunately, just watch a little bit more. You set the alert, the 21-day gets broken. Now you know I got to keep an eye on it. Towards the end of the day, last 10, 15 minutes, 5 minutes over the market, you come, see where it's at, see how it's holding up, and then make your decision. You could also obviously sell at post-market if that is your kind of style of what you like to do. But if you have a hard stop, what I think this is very good is when you buy a breakout, or you buy a setup and you know this is my line in the sand. If the price hits this intraday, I am out. Maybe it's even just a rough percentage, 5, 6, 7, 8%. If the stock hits this price, regardless of what's going on, it hits it, I'm out. That is the perfect opportunity to use those stop loss orders. The other way you can use this, even if you have a trailing stop on the 21 EMA, most of us have a uncle point that even intraday it gets through, whether it's a technical area, whether it's a percentage that you're giving back, whatever it may be, that is even if it breaks the 21-day intraday, but it hits a certain point, like I said, whether that be percentage or technical area, that is your out. That is non-negotiable. It hits it intraday, I'm out. You could use it there. So I guess the big thing is just understanding that with those stop loss orders, you set a point. If the stock hits that point at any time intraday, it then turns into a market order and it's executed. So if you are looking to sell intraday, if it hits that price and there is no, okay, we'll see how it closes, then that's the point to use it. but it is very good for protecting yourself because, let's just say, and it's happened before with some stocks, you have names that you're like, okay, they're doing fine. They're doing fine. I'm just going to trail the 21. And then all of a sudden the stock drops 10% intraday. And it's like, all right, I'm way below the 21. Like I'm out. But you don't have that order in, you don't have the alert, you can't check the market. And then all of a sudden, next thing you know, 2 hours later, now the stock's down 18% or 19%. And I think that actually, oops, why is my key button? There we go. Okay. Was it NVIDIA? That was an 8% drop. That was kind of already rolling over. Oh, here it is, right? What was the drop here? Yeah, this was a 17% drop on NVIDIA. This was that DeepSeek day, right? That's kind of where you might want, okay, so maybe let's just say you were in this for whatever reason, longer term, you were trailing the 50-day simple moving average, but you said if it creates a lower low, then I'm out. And you put a stop loss here so that once it broke, it triggered. It could help with, you opened here, you get out, and then you don't have to suffer what would have been another bunch of percentage drop in that. So another way to use it, line in the sand stops, great way to use those stop loss orders. And other than that, set alerts. That's the other way to go about it. If you do have the ability to just get an alert on your phone and then react to it, then that's another option that you can use. So again, that was just something that was asked over on Discord that they asked that I bring up. And because I think a lot of us don't have many stocks that we're really too keen on looking at right now, because a lot of things did get hit. And I think a lot of us are just going to be sitting patiently, seeing how the market reacts before we decide which direction we're really going in terms of deciding to buy more things. All right. Don't see any other stocks or anything in here. So final thoughts. Let's get through that. Again, I'm going to say it again. I say it every week, and I'm going to really, really say it this week. This is why it is important to have a plan. Friday morning, everybody was smiling ear to ear. And then by the end of Friday, everybody was like, okay, didn't expect that to happen. And even those people who have been saying this market's going to roll over, this market's going to roll over, this market's going to roll over, there are people that have been saying that for weeks now. There are people that have sat out of the market thinking that this can't go on any longer and have gave up a ton of opportunity for profits because of this. And now they're like, I told you it was going to happen. It's like, well, you missed a lot of money as well. So it's like nobody knows what's going to happen. That's why you have to have a plan for both directions and be ready to react and just take things day by day, things will change. If we had a good day on Friday, I'd be sitting here telling you guys this is an amazing bull market and, don't count it out and keep riding the trend. But we had a reaction Friday and now my position has completely changed. So remember that. If you did get hit hard, one of the things I do want to say is just understand in some instances, if you followed your plan, if your plan was a sound plan, that this is just what happens. Sometimes you're going to get hit. You're going to take losses. If you read Market Wizards, I have a ton of those books over there. You'll hear tons of times where the market just out of nowhere dropped and people got hit and they took losses, and it's just part of the game. Do not let it put you on tilt. Do not let it have you start chasing to gain those gains back. Do not start trading emotional because of what you had happen to you on Friday. If you navigated this well, then you really should be studying what you did. How did you operate? How did you handle this market? What things allowed you to profit the most and not give them, too much back? Study that and, see how you could just build that into your rules to make sure that moving forward, you have that ability to come into another situation like this and have the same success that you did have. Shake, if you guys don't know Shake Prisby, was my high school quarterback. I blocked for him in high school. He put a post out, and if you don't know who he is 2024, the second place in managing $1 million in the U.S. Investing Championship. Great trader, great swing trader. Definitely check him out if you don't know about him. But he put a post out, and he said that, especially with September, with how great it was, really take the time this weekend, study those great winners, study the setups, study how they broke out, study how you found those, how you handled that trade, and how you could have even improved on that trade. But study those winners, really, really good, because those patterns, those situations will present themselves again, and you want to be able to repeat that. Profiting that you did in that situation. So great opportunity. This is one of those where a lot of studying should be going on, studying of this year, studying of winners, losses, and making tweaks so that you have a chance to either improve or continue to do what you are doing that brought you some success. All right. That's all I got for this week. I appreciate everybody joining. I know not always the funnest when we're talking more on the defensive side of things. A lot more fun when we're looking at stocks, talking about how we're going to be making money next week. But this is just part of it, especially for you newer traders. This has been a really, really easy dollar market. This has been a really great market for making a lot of money. And it's just not always like that. And that's why trading is also fun. It's a challenge. So there you go. You guys have YouTube up there. If you're on X, you have YouTube. YouTube, you have X up here. Take a look at. Again, Discord, link in the description of YouTube. And if you want to check it out on X, just shoot me a message. Gmail, right over there if you want to shoot me a Gmail. And again, Deepvue, love it. You got in my bio on X and also in the description on YouTube. Check that out. Like I said, it's risk-free. Just throw your name on the list if you want to check it out. Ron, anytime. I appreciate the support. It means a lot. I love getting, when you guys send me messages, whether it's privately or publicly, just saying that you're enjoying this, thanking me for this, super, super helpful just to keep me motivated. I started a lot of this as like a journaling kind of thing for myself to keep track of how I'm looking at the market. And it also helps to share, and it helps me to really deep dive into this stuff because I know I'm putting this out there for other people. So I have to make sure what I'm saying is something I truly believe in. I'm not just glazing over the information. And like I said, it'll be good for me to look back on and see how I was thinking about different things at different points of the market. So, Ron, appreciate that little appreciation more than you know. Thank you very much. Everybody else, thank you. And if you are watching the replay, thank you as well. Appreciate it. And yeah,